Sine die is Latin for without a day, but in the world of forensic accounting, it simply means the final closing of the session ledger, where the management team in Atlanta has finally submitted their year-end financials to the public.
Bill should be lower next year. Before yelling sine die, lawmakers passed a last-minute reduction to the state income tax rate and increased the standard deduction.
A Good Day's Mark Teichner is live at the Capitol with more on the last day of the legislative session. Good morning, Mark.
Yeah, good morning, guys. It was late into the session, just a couple of hours left when this was approved, a tax bill that is now going to give you some immediate relief and even more down the road.
I move that the Senate stand adjourned. Sine die.
Another legislative session has come to an end, and this one will likely leave more dollars in your pocket. Lawmakers approved an income tax reduction, bringing the rate down from 5.19% to 4.99%. As long as state coffers can afford it, that number will keep going down until it reaches 3.99% in 8 years. The bill also increases the standard deduction from $12,000 to $15,000 for single filers and $24,000 to $30,000 for married couples.
We are auditing a scenario where a last-minute dividend payment was issued to the taxpayers in the form of income tax cuts, while the material liability of property tax reform was amortized into a watered-down assessment cap that fails to address the underlying rate inflation. The audit trail of this session reveals a management team that is desperate to buy back voter equity before the 2026 election cycle, even as the infrastructure of the voting system remains an unreconciled account that could trigger a special session hostile takeover. This is the sine die settlement audit, and for Camilo's house, we are documenting the moment where the state coffers were tapped to provide short-term liquidity, while the structural deficits of the Georgia tax code were left off the books. I am Camilo Motado, and this is Camilo's house. As a certified public accountant focused on forensic data verification, I look past the cheering and the paper toss to see the consolidated statement of cash flows for the Georgia taxpayer. In a standard audit, a reduction in revenue must be balanced by a reduction in expenses or a surplus in retained earnings. Today, we are performing a legislative ROI audit on the 2026 Georgia session. We are analyzing the material impact of the income tax drop from 5.19% to 4.99% and the step-down amortization that aims for a 3.99% terminal rate. We are documenting a management override, where the Speaker of the House is already threatening a special audit to handle the voter reform default that failed to cross the finish line before the clock hit midnight on April 2, 2026. The operational highlight of this session is the accelerated tax liquidation found in House Bill 463. Lawmakers approved a reduction in the state income tax rate, bringing it down to 4.99% retroactively to January 1, 2026. From a forensic valuation standpoint, this is a conditional asset. The legislation includes a clawback provision, or a safety trigger. The rate will only continue its descent by 0.125% annually until it reaches 3.99% in 2034 if the state meets certain revenue benchmarks. In accounting terms, this is a contingent liability for the state budget. If the market performance of Georgia's economy dips, the amortization schedule for these tax cuts will be frozen or impaired. The management is promising a high-yield future, but the prospectus reveals that the dividend is entirely dependent on the revenue inflows remaining at all-time highs. We also have to audit the standard deduction revaluation. The personal exemptions on the Georgia ledger are getting a market adjustment, moving from $12,000 to $15,000 for single filers, and doubling from $24,000 to $30,000 for married couples starting in 2027. Eventually, these deduction assets are slated to hit $18,000 and $36,000. For the senior stakeholder segment, those over 65, the retirement income deduction is being upgraded by an additional $5,000 per person. From a tax planning perspective, this is a strategic write-off designed to protect the retained earnings of the elderly. But the most innovative line item in this audit is the $1,750 carve-out for tips and overtime. By making this incremental income tax-free between 2026 and 2028, the state is performing a microtransaction incentive for the service sector assets. It is an attempt to increase labor participation by reducing the tax friction on the marginal dollar earned. However, the property tax ledger is where we find a material weakness in the session's internal controls. Speaker Burns and the House management team were pushing for a total property tax overhaul under House Bill 1116. But what emerged from the Senate audit was a watered-down instrument known as Senate Bill 33. The final bill caps assessment values at the rate of inflation, or 3%, but it does not cap the total revenue levies. As a CPA, I track the double entry impact. If you cap the asset valuation but leave the variable interest rate untouched, the total liability for the homeowner can still balloon. This is a forensic facade. It creates the illusion of relief while allowing local taxing authorities to inflate the rate to compensate for the frozen assessment. The management has admitted they are not giving up, signaling that this account remains open and unreconciled for next year's audit cycle. The failure of the voting system revamp is the unrecorded loss of the session. A bill intended to re-engineer Georgia's election infrastructure by removing QR codes and overhauling equipment failed to reach final certification before the July 1st deadline for new equipment. Speaker Burns described the unfinished business as troubling, a forensic disclosure that suggests the internal controls for the 2026 election are currently suboptimal. There is already talk of a special session hostile takeover, asking Governor Kemp to call a special audit to force the voter reform ledger into compliance. From a risk management perspective, leaving the voting rules in a state of ambiguity so close to a high volatility election is an operating hazard that could lead to systemic instability at the ballot box. We must also look at the state coffers as the collateral for this entire political transaction. Georgia is currently sitting on a record surplus, a capital reserve that has allowed the board of directors to issue these dividends without cutting essential services. But as an auditor of trends, I have to ask, is this surplus a sustainable asset or a one-time extraordinary gain from pandemic-era federal injections? If the state's revenue ledger is artificially inflated, then locking in permanent tax reductions is a high-risk management strategy. It's like a company increasing its dividend based on a settlement payment rather than operating income. If the cash inflows normalize, the state portfolio could face a liquidity crisis that would require a tax hike in the future. The tips and overtime exemption is particularly fascinating from a forensic incentive standpoint. At $1,750, it is a de minimis amount in the grand ledger, but it acts as a social equity asset. It is the first time the state has segmented its income classification to favor hourly and tipped workers. This sector-specific relief is a targeted reinvestment in the labor infrastructure. However, the compliance cost for small businesses to track and report this specific threshold will be a regulatory liability that hasn't been fully valued yet. Every accounting department in the state will now have to reconfigure their payroll software to ensure tax-free accuracy for this micro-ledger. The sine die festivities, the yelling, and the sunny-dyed traditions are the distraction assets that mask the legislative fatigue. After 40 days of negotiating the terms, the final closing is often rushed and non-transparent. The last-minute approval of the tax bill, just hours before the contract expired, is a red flag for procedural integrity. In any professional audit, the late-night adjusting entries are the ones you scrutinize the most. This accelerated closing means that many stakeholders haven't had the time to perform a full due diligence on the fine print of these tax revisions. We are accepting the management's figures on faith, but the true reconciliation won't happen until the voters file their returns next year. The special session threat is the management's way of hedging the bet. If the voter reform default causes too much reputational damage with the GOP base, they will reopen the books in a special audit. This fragmented governance is inconsistent and expensive. A special session is a supplementary budgetary outlay that the taxpayer has to fund. It is the price of management's failure to reach a consolidated agreement during the regular reporting period. The voter reform issue is a toxic asset that neither chamber wants to write off, but neither has the capital to fully fund a compromise yet. The final reconciliation of the Georgia 2026 sine die audit reveals a state government that is liquidating its surplus to boost its approval rating. The income tax dividend is a positive ROI for the voter shareholder, but the property tax material weakness and the voting reform default are outstanding liabilities that impair the overall audit opinion. The management has closed the books for now, but the adjusting entries for 2027 are already being drafted. We are looking at a budgetary policy that is fully leveraged on continued growth, a bull market strategy in a multipolar world of economic uncertainty. My forensic verdict is that the Georgia legislature has provided short-term liquidity while deferring the structural audit. The tax cuts are a credible inflow to the family balance sheet, but the failure to cap property tax rates proves that the real estate lobby still holds a senior claim on the legislative agenda. The voter reform gap is a systemic risk that could lead to information asymmetry at the next election. Until the management can reconcile the voting ledger and seal the property tax loophole, the sovereignty of the Georgia taxpayer remains undercapitalized. I want to hear from you. Is the 3.99% income tax target a sustainable growth strategy or a fiscal default in the making? Does the watered-down property tax cap feel like a material relief to you, or is it just a bookkeeping trick to hide rate inflation? Let me know in the comments. Your perspective is the only audit that matters when the proceeds of your labor and the integrity of your ballot are sitting on the negotiation table. I am Camilo Motado, and this is Camilo's House. Subscribe to stay informed on the numbers, the laws, and the truth behind the headlines. Stay safe.